Gold has been in the news of late, and more so because of the latest investment option, Sovereign Gold Bond 2020. So, what is a sovereign gold bond? It is an electronic form of gold, in other words, an alternate to the traditional physical gold. It is issued by the RBI, the Reserve Bank of India, on behalf of the Government of India. And the good thing is that it is backed by physical gold held by the Government of India. So, who can invest in it? Well, if you are an Indian resident, then yes, of course, you can invest in it, or an individual, or an HUF, a trust, a university, or a charitable institution, a joint holding, or even a guardian can invest on behalf of the minor. But how do you go about investing in it? Do you have to go to the RBI? No, not at all. You can visit any notified bank or post office or stockholding corporation of India or any authorized stock exchanges directly or through their agents. So you must be thinking, what's the catch? Well, sovereign gold bond has a lock-in period of 8 years. In other words, your investment is locked in for 8 years, but with an exit option at 5 years. But if you have bought them from a stock exchange or their agent, you can trade it like any other stocks. So what happens after 8 years or 5 years? After 8 years, that is on maturity, you get the redemption price, which will be that day's gold rate, plus you would have received interest at the rate of 2.5% per annum. In case of premature redemption, that is after 5 years, also the same. That day's gold rate will be your redemption price plus the interest earned at the rate of 2.5% per annum. The minimum investment can be as little as 1 gram of gold, and maximum for an individual or an HUF can be 4 kgs, while for a trust or a similar entity, it can be maximum of 20 kgs. So now that you know about the sovereign gold bond, let's know what are the advantages. And they are, it's comparatively risk-free as it is backed by the Government of India and also against physical gold. There is no issue of storing safety and security of a physical gold. Investment in a sovereign gold bond can be used as a collateral for procuring loans. On maturity or redemption, one earns the differential gold price, which would have increased after 8 years or 5 years, plus the interest at the rate of 2.5%. The sovereign gold bond also provides tax benefit, but on maturity only. So should you invest or should you not invest in a sovereign gold? Let's see what are your options. So what's your goal? If you're looking for diversification, then yes, you should invest. If you're looking for a less risky option, then sovereign gold bond makes sense. If you have surplus money to invest, then you should invest. If your investment tenure is long term, that is 8 years or 5 years, then you should invest in a sovereign gold bond. But if your goal is, if you're just about building your portfolio at this point of time, one shouldn't start with sovereign gold bond. Or if you are looking at something which is no risk, then one shouldn't be going for sovereign gold bond. Or you are yet to receive money, you don't have money in your hand, then it's definitely not a good idea. Or if you're looking for very short-term investments, whether you invest or do not invest, one thing to remember is that the last day of investment is 4th of September 2020. If you have liked this video or if you want to have more videos on similar topics, do visit us on www.ivomoney.com or follow us on Instagram, Facebook or Twitter.